Hi everyone, and thanks for checking out my channel. I'm going to do something a bit different tonight, and I've been look at a couple of markets that I'll be looking at trading for next week, but in some sort of a sniper mode, that when I'll be looking at very key levels, and if I don't get to these levels and to the right setup, I probably just won't be trading this. That's to reduce my exposure early into the month and securing some reasonable profit, not taking too much risk. I believe the volatility will get back, so I don't want to get caught on future contracts with some overexposure, taking too much risk at that point, and see how we go for the week and potentially increasing the exposure for the coming weeks if it works good for the week or the coming 2 weeks. So starting with copper, copper did work nicely last week, so we got that very nice I think there was a 4 hours candle that was really neat, really clean divergence at the top as well. We're still playing alongside that trend line, so no one is on the 4 hours, but the biggest one is on the daily, or the 1 hour is actually stretching very far away, which is why I believe we are going to revisit 2.7, potentially 2.5 at some point, but for now we may have some momentum to the upside, and I'm looking at a new short entry point. 3.7, 3.07, 3.08 would be great. That's the previous lower end of the rising wedge. Another touch would be a really good short entry point. I believe it's a bit too late to enter long, and of course too risky to open short from here. So that'll be one thing I'll be looking at. The other one is silver. Silver is in a similar configuration, so we're having what I believe is still bear flag inside a very large move to the downside, still having that target at 21.6, but we could see an extension down to 20. This is not over, I believe, for the move down for silver, but short term we might actually see another try to that trend line, another move to the upside, another touch on that RSI trend line. So I'll be looking at 25.6 area for short entry. I'm not buying here. I believe this is too risky, and I usually don't buy against key divergence when we are approaching trend line support or similar levels. So I'll be looking at this. If we don't get there, I'll be just missing this, and I'll be waiting for silver to accumulate long. Should we get buy signal from that 21.6? Another market very interesting that I actually gave the signal last week, as we can see, is corn. We have seen here on the daily very neat divergence, really close to key support, and we're having that trend line running at 395. That's actually a very long-term trend line. It's been running for quite a while between these 2 points, so I think we're talking about yeah, roughly a year ago. So really doubt it will actually break any higher than this. We could make another attempt to break higher, but I believe the roof here, the ceiling, is a 387, so relatively low risk trade, but good reward. As we can see, the target for the rising wedge would be from the breakout somewhere. So we're looking at 325, which is also the origin of the divergence that we're having here. Well, actually sitting a bit higher, so 350 would be the first target, but potentially extending to 325, and let's see if we can make a triple bottom at 300. But that's a little bit of a stretch, so we'll see. I'm not going to trade this because there's no ETFs to trade corn, unfortunately, but if you trade CFD, that should be available to you, and I believe that's a very interesting trade. Looking also at coffee, that one was not successful for me. Unfortunately, it got stopped out just on that move to the downside, breaking 105 or really getting close. These things happen, it's okay. I was managing the position okay, so did manage to actually close with a reasonable loss. Now what I'll be looking at is that trend line we're having now on the 4 hours looks better now. As I say, I didn't like that one too much, but I think that one here is actually quite interesting. Should we get another touch on that trend line here, which is a break below 104 with a solid reaction here, and that falling wedge could actually be very interesting to trigger a move to the upside and a breakout to at least retest 117, potentially pushing and stretching to 123 to clear up that divergence entirely. We are talking basically at 118. I believe that would be the target. Probably ambitious to actually go much higher before we'll get rejection from that point and go back down to the key support around 95. But I'll be interested in buying here. If it does actually break out to the upside here 1110, I'm not buying this. This is just too risky. If it breaks to the downside, of course, limited potential for the move down, probably too risky as well to short from there. So, and finally, looking at the market, I'm very unlikely to try it, but still, if you're happy to take some risk, there's an interesting falling wedge as well on natural gas. I took long position as well on this and got stopped out again under the support line. Was really tricky to trade, and it was definitely risky. But when we look here, I think it's under 1 hour. Just clean that up. So it's a bit more obvious, but we get a really neat divergence that's actually pointing to correction back up to 2.7. So either we make another touch here. There's also the 200 MA that's running here on the 1 hour. 238 could be interesting to actually open long, hoping for a break of that level, and breaking here to go back up to potentially 270. That would be a short entry point potential. The only issue we're having here, of course, is the gap that we're having here, and that one will close at some point. Either it will close after a massive run to the upside, then moving down. It is of course possible, but I think entering long here is still a large exposure to that to fill in, and underneath that level we are actually not too far away from the support area. That's 1.9. That should actually offer enough support ahead of winter, but still entering here, of course, down to here, that's a massive risk to take, and with natural gas we know that it can actually go bad really quickly. So probably we will pass on natural gas for next week, even if it means missing some opportunity, but I believe the risk is a little bit too high. Should we get really clean divergence, another touch here, potentially I could consider it, but let's see how we go. So yeah, that's all for the week. Or for that weekend, and looking ahead for next week. Wish you safe trading, and I speak to you soon. Cheers, bye.